Hello traders and welcome back to the second trading week of 2022. Hope you had a great trading week and crushed the market, made a lot of profits. This week I have three pairs for you. The first one is Aussie, the second one is Loonie, and the last one is the yen. I'm gonna go over these three pairs starting with the weekly time frame. The pair you're watching is Aussie, Australian dollar to US dollar. We are started creating a downtrend move from the May of 21. If you count this as a high, we have started to forming lower high, lower low, lower high, lower low. And this week, lower high, and we're expecting to test this low and make a new low. This high that we closed bearish at for this week was previously support, now it's resistance. And we also made this low at the great price of 0.700, which if you're following the quarter pound theory, this is the great number to keep in mind. So with the structure forming lower high, lower low, lower high, lower low, lower high, we aim to test this low and continue moving bearish to create new lows. What I'm expecting to see this week on Aussie is that we start the week to go a bit higher, like somewhere around 0.7210 to 0.7220, and create an upper wick for our weekly candle. Then I start flushing all the way down to fill this week and close somewhere below 0.7110. Probably will be a great trading week on Aussie. If we go down to the daily time frame, we can see support here. We might also count this as resistance, or you might modify your weekly resistance to here, which I'm not suggesting to doing that. So we count this one as minor resistance, support now breaking, retesting, and resistance. So we have two options to go short here. The first one will be when the market opens on Sunday, you just enter short here with the stop loss above the weekly bearish candle and the take profit all the way down to the 0.700. This trade will give you a nice risk to reward of 1 to 8. 1 to 1.8. The stop loss is a bit wide. It's 98 pips, almost 100. And you have to keep in mind that you're going to pay a lot of fees and spreads and commissions. The other one that we can anticipate is wait for this support to be broken, retest, and then enter short position here. We take profit below here and the stop loss above the candles that's forming here. Let's suppose the candle will give you a 35 pip stop loss. This one makes more sense. It's a 1 to 2.7 trade, and you can write it all the way down if you leave a runner. This is USDCAD. Let's start with the weekly time frame. So as you can see, we have this downtrend move from the beginning of the pandemic. It's April 20. We started the moving down, but here what I see is that we are breaking this downtrend structure and we are aiming to start the bullish move. What I'm gonna draw here is a trend line. This is the weekly time frame, by the way. This is what you can see, touches. So last year, the last 2 weeks of last year, we rejected the 200 EMA. We bounced back, and I think we created support here. This week candle closed bullish with the huge wick on top. We might see this week gets filled and continue to move up all the way through this high. On daily time frame, we can see this support more clear. The support is at 1.2650, which we closed bearish at, and this is again a retest of the 200 EMA. If I see a doji candle here, or preferably a rejection, a bullish rejection here, I'll go long with my stop loss below that rejection candle and take profit on the high that we made. This will probably give us a 1 to 3.5 risk to reward trade. What else we can add as a confluence is the Fibonacci. This is the leg that I will be counting it as a breaking structure leg. I'll draw from here all the way to the top. And as you can see, my entry, this is the red line that I use as an entry on Fibonacci, is in confluence with this support and 200 moving averages. So this could be a great long entry on USDCAD. Whenever I see a perfect entry, I'll send out the signal in the channel. Let's just see the 4 hour for this one as well. Well, yeah, that's it for now. I don't see anything else. It's aligning very well with my confluences and my strategy to go long on this pair. Let's get back to the weekly time frame and the US dollar to Japanese yen pair. So the move is bullish. We are making higher highs, higher lows. We broke this high. We are aiming to go bullish all the way to the weekly high of 118, which is for so long ago. I'll zoom out to see that price. There we go. It's for December 2016. I don't see anything else in between, so we should clearly fill this area and go all the way to 118. Yeah, that's it. Let's get to the daily time frame. So our base on USD Japanese yen is bullish. All I'm trying to find is a support to enter a long position here. We might see this as a support. I don't count it as a valid one because these were the last trading days of 2021 and there were yeah, this is the last days and there wasn't enough volume in the market. So I'm not going to count this as a valid support area or resistance either. What I'm expecting to see is, let's use the Fibonacci here. This is my entry area, 114.3, which will be my weekly resistance as well. So this is the area I'm looking to enter long with my stop loss below the daily candle of the rejection. First target will be this high, which we have created this week, then all the way to 118. This is one scenario. The other one is we just start forming the support here, which is this resistance. We broke it. We are now making it as a support and we start going all the way up from here. So my entry will be here, stop loss below this minor not valid support and take profit. First one, the high that we created. The second one will be 118. This will give you a nice 1 to 4.45 risk to reward ratio trade. These were the 3 trades that I wanted to share with you. I'll send the signals later when I get the perfect entry on them. Just wish you guys luck and hope you find this trading week a great week for yourself. Enjoy.